The financial landscape is ever-evolving, constantly presenting new and intriguing investment opportunities. Traditional assets like stocks and bonds remain important. However, investors are increasingly drawn to alternative investments. These promise diversification and potential for significant returns. Among these alternative investments, gold and Bitcoin stand out. Both have captured the attention of seasoned investors and newcomers alike. They represent distinct asset classes. Gold, a tangible asset with a millennia-old history. Bitcoin, a digital currency barely a decade and a half old. This essay delves into the reasons behind gold and Bitcoin's appeal as investment choices. We'll explore their recent performance, investor behavior, and the factors influencing their price movements. Finally, we'll consider the potential for these assets to coexist in diversified investment portfolios, shaping a future where both traditional and alternative investments play crucial roles. Gold has long been a safe haven asset. Throughout history, gold has held value. It often rises in price during times of economic uncertainty. Recent global events have reinforced gold's appeal. Geopolitical instability, rising inflation, and concerns about the stability of the financial system have all contributed to a surge in gold prices. In March 2025, gold reached an all-time high of over $3,000 per ounce. This surge reflects the heightened demand for safe haven assets. Investors seek to protect their wealth amidst uncertainty. Gold's tangible nature and its historical role as a store of value continue to make it an attractive option for those seeking stability and a hedge against economic turmoil. Bitcoin, the world's first cryptocurrency, has captured the imagination of investors seeking high-growth potential. Its decentralized nature and limited supply have fueled its meteoric rise. Bitcoin's price, however, is known for its volatility. It has experienced dramatic price swings since its inception. Despite reaching an all-time high in late 2021, Bitcoin has faced challenges. Regulatory scrutiny, competition from other cryptocurrencies, and concerns about its environmental impact have contributed to price fluctuations. While its long-term potential remains a subject of debate, Bitcoin continues to attract investors who believe in the transformative power of blockchain technology and the potential for significant returns. Recent market trends have highlighted the stark differences in performance between gold and Bitcoin. While gold has surged to new highs, Bitcoin has experienced a decline. This divergence in performance reflects the distinct nature of these assets. Gold, a tangible and finite resource, benefits from its safe haven status during times of economic uncertainty. Bitcoin, a digital asset subject to market sentiment and regulatory shifts, is often perceived as a higher risk, higher reward investment. The contrasting performances of gold and Bitcoin underscore the importance of understanding the factors driving their respective markets and the potential risks and rewards associated with each asset. Section 5. Shifting Tides. Investor sentiment between gold and Bitcoin. Investor sentiment plays a crucial role in shaping market trends. The recent divergence in gold and Bitcoin's performance is a testament to shifting investor preferences. Inflows into gold ETFs and outflows from Bitcoin ETFs indicate a growing appetite for stability and a decreased risk tolerance among some investors. This shift in sentiment is driven by a multitude of factors, including geopolitical events, inflation concerns, and regulatory uncertainty surrounding cryptocurrencies. Understanding investor sentiment and its drivers is essential for navigating the complex world of alternative investments and making informed decisions about portfolio allocation. Section 6. Bitcoin's institutional embrace, a sign of growing acceptance. Despite its volatility, Bitcoin has witnessed growing interest from institutional investors. Major financial institutions are increasingly recognizing the potential of cryptocurrencies. The launch of Bitcoin ETFs has provided a regulated avenue for institutional investors to gain exposure to Bitcoin. This has increased its legitimacy and attracted significant capital. Moreover, companies like ProShares are developing innovative financial products that combine traditional assets with Bitcoin. This integration of Bitcoin into traditional finance signals a growing acceptance of cryptocurrencies. The increasing institutional interest in Bitcoin is a significant development. It could lead to greater stability, maturity, and wider adoption of cryptocurrencies in the future. Section 7. Gold's stability versus Bitcoin's volatility, decoding the factors. Understanding the factors influencing the stability of gold and the volatility of Bitcoin is crucial for investors seeking to navigate these markets effectively. Gold's stability stems from its limited supply, historical significance, and diverse uses. Its role as a safe haven asset is deeply ingrained in investor psychology, providing a degree of price stability during economic downturns. Bitcoin's volatility, on the other hand, is driven by factors such as market sentiment, regulatory developments, technological advancements, and competition within the cryptocurrency space. While gold's stability makes it an attractive option for risk-averse investors, Bitcoin's volatility offers the potential for significant returns, but also carries higher risks. Section 8. Investor Profiles. Unveiling the forces behind investment choices. The investor profiles for gold and Bitcoin differ significantly, reflecting the unique characteristics of each asset and the motivations driving investment decisions. Gold often appeals to older, more conservative investors seeking to preserve wealth, hedge against inflation, and mitigate portfolio risk during turbulent times. Bitcoin, on the other hand, tends to attract younger, more tech-savvy investors comfortable with higher risk and drawn to the potential for significant returns and the disruptive nature of blockchain technology. Understanding these investor profiles and their motivations is crucial for gauging market sentiment, anticipating price movements, and making informed investment decisions. Section 9. Coexistence and Diversification. A future with gold and Bitcoin. As the financial landscape continues to evolve, it's increasingly likely that gold and Bitcoin will coexist, catering to diverse investor needs and risk appetites. Gold will likely remain a cornerstone of diversified portfolios, providing stability, a hedge against inflation, and a safe haven during economic uncertainty. Bitcoin, with its potential for high growth, disruptive technology, and increasing institutional acceptance, will likely continue to attract investors seeking exposure to the transformative potential of cryptocurrencies. Ultimately, the key to successful investing in a future shaped by both traditional and alternative assets lies in understanding the unique characteristics of each asset, carefully assessing risk tolerance, and constructing a diversified portfolio that aligns with individual financial goals.